So before I get started, I have finally made a Telegram channel where I post free Forex analysis such as fundamental analysis, technical analysis, and I show you trades that I'm in. I don't give free signals, but if you wish to help on those trades, it's your risk. And if that's something that interests you, the link will be in the description below. Before I get started into supports and resistance, I want to talk about how it works and what it is, because I know that there are beginners in this channel or people who have just started into trading and they don't even know what support and resistance are. So let me just give you an example of what it is. So support and resistance, let's give you an example. Let's say price is moving up. Forget about the numbers on the side. Let's just think of it as a random graph acting like we are the market. So let's say price is going up and drops back down and goes back to this point in the market. Okay, what the market has now made is a resistance. And what that means is that in this area, price has failed to either go beyond it or it just keeps on rejecting. Price does not want to go beyond this point. So what we could see, which can be normal, is a breakout, retest, and going up. Now, the reason why I didn't put it exactly at this point is because the price can be at an area. It doesn't have to be one specific point. And the same thing for when we're making support. So let's say price goes down, goes up, comes down. What we have made now is our beautiful support. So this is what we call is our ceiling, and this is what we call our floor, right? But as you can see in this one, you can see that this ceiling has now become our floor, which is normal in a chart. This is what, price doesn't just go up in one point. It likes to go up, come back down, up, come back down, and up. It likes to do that. And when we see these pullbacks, we call this retracements or retests to a certain area. So for example, price, maybe this was another support level where price can now, I know I'm overcomplicating things, but price can now just drop all the way back down to this level and then move back up again to wherever. Yeah? So you have to make sure you understand that our supports can turn into resistance and our resistance can turn into supports. So this is normal in our chart. So even when we're built a support, price can just reject our support. It doesn't have to break through, it can just reject. And this could be an opportunity for a buy. This area can be opportunity for a buy. This area of opportunity can be for a sell to this support. So it just helps you build structure onto your chart. So let's see it on our gold chart now. As you can see, this is what gold is doing. It looks like a mess at the moment. You don't know any levels. You don't see any support resistance. There's no moving averages. I don't like any of that. When I first analyze a chart, I like to just keep everything simple and just put on my key levels. Now, before I put in these key levels, I know I've been talking about key levels a lot. Key levels that I put in are not random levels, okay? They're not 19, 24, 14 or 19, 41, 12. These key levels are round numbers. So why I keep it as round numbers is because banks, and if you see a lot of fundamental news, they don't like to say these random numbers. What they like is they like to keep everything round numbered. So for example, 1800, 1900, 2000, 1700, 1750, those type of numbers which roll off your tongue, those are the numbers that they like. So if I start drawing in key levels, it will make more sense. So let's break it out. So let's just say we keep one level at 2000. We keep another level at 1900. We keep another level at 1800. And we keep another level at 1700. Like I said, it doesn't have to be specifically at these points because like I said before, I like to draw rectangles to keep these as little zones. Okay? So if we just draw our little zones here, it doesn't have to be accurate. This is just a rough analysis. And we're on a daily chart. Why we're on a daily chart is because I'm a day trader. So I don't need to look at the 15-minute chart and place trades and come out of it straight away. I want to hop on a long trade. I want to hop on a trade that will get me the most amount of pips, which will get me the most amount of money. And I like to roll with the trend. Okay, I don't like to just go for little moves from here to here. I like to go for these big moves from here to here. Those are the big moves. Doesn't matter how long it takes, but I like to roll with these big trends. So if I just continue drawing my zones, now you can see that we've now made structure. As you can see now, we have now created structure to our chart. So now it's easier to see that prices move from one level to the other level, and then that level to another level, and that level to another level. And you can see without a moving average that we're on a downtrend, because you can see that we were from this point 2000 or 250 almost all the way down to almost 1700. You can see that. So that just shows to you that, you know, price is moving down. Maybe we're not in a downtrend at the moment. We can see that price is dropping. So we are now looking at price moving maybe to even lower, to maybe 1600, but we can put that in as well, 1600. But that's, at the moment, I don't want to go into detail about what's going to happen. I want to talk about how support and resistance helps you trade. So as you can see over here, from 2000 to 1900, you can see that price went straight. In one day, went from one level to the next level. Yep, simple. And you can see now, yeah, price did go below this. But at the end of the day, it was still above this level. It was signifying that price was going maybe to the upside. So potentially you could have, if you scaled in, saw the right candlesticks and entered the trade, you could have entered the trade from 1900 all the way to 2000. And this helps you because every time it hits my key level, something happens to the chart. So example, rejection goes up, rejection goes up, rejection goes up. Again over here, rejection goes down, breakout. So you can see that this is a very, very strong key level. Even at the 1800 strong key level, you can see that we saw rejection all the way to the next channel. We saw rejection again all the way to the key level. We can see now a breakout, retest, and breaking down to the next channel. Structurally, it shows you that, price can go here to here. So this helps you now understand that, okay, every time price goes near my key levels, we see some type of rejection. So this helps us a lot when entering a trade. So let's say, for example, I see, okay, a breakout and it's a retest to my level. I will straight away go for a short position. Yeah, obviously there's other factors to it, but we go into a short position, put my stop loss just above, the box, and take profit at my next key level. So this shows us that we are getting as many pips as we can get. We are making sure that our risk to reward ratio is proportional. So, this is 1 to 7. So that means that every £1 I put in, I'm winning £7, right? Which is very important when you're trading. And I know that price is going from one area to the next area. And again, we can see, I saw this trade last week and I did say that gold is going to hit 1700. And I did a short position here, kept my stop loss very close, and I'm still in this trade. In a trade, that's a lot of pips you're getting. Even if you have a 0.01 lot size, that's £100. So you can see that if you start basing structure into your charts, and if you see that this structure goes from support to resistance, if you see that, it helps you understand what price is going to do next. Yes, you might see gold loves to do fake breakout and go all the way down to the next channel. But if you understand, candlesticks, and you look at fundamental news, different factors into trading, it will help you understand more about your currency and how it moves. Because now you understand that price has now moved from 2000, 18th of August 2020, to now 2nd of March, and price is almost hitting 1700. So you can see that price is going downwards. So you don't want to be hitting any buys unless you see at my key level, price either rejects it, it will go up. If it breaks out of it, as you can see here, we're seeing a downtrend to the next key level. And again over here, I would say if I see price will consolidate here, but if I see a breakout, retest, and it goes down to here, I can say, cool, price is coming to this area right over here. And look at previously how this area, has it been effective? I'm looking at the area and I'm seeing, okay, yeah, a little bit of rejection here, rejection here, rejection here, and we went from the upside over here. So yes, price can do that. Price can. If we're still continuing to go in the downtrend, price can do that. So in conclusion of what I'm saying is that make sure that your levels are round numbers. It can be 1850 if you want. Look, if I show you, if I put it at 1850, you can see 1850. You can see that price is rejected here, so you can see that, okay, I will go from 1850 to 1800, and you're still catching the pips, and you're still understanding how price works, and you're still seeing that, okay, at 1850, I'm seeing that price loves to, reject and likes to go down. Price again, coming down, goes up, comes down, okay, breaks out of it, goes to my next level, which could be, 1950. So what I'm saying is that make sure that your support and your resistance are at key level, because you will understand that in any chart, doesn't have to be XAUUSD, in any chart, your support and resistance are important because it can indicate what happens next, or it can help you place your take profits or your entries or your stop losses, and this will help you understand your pair a lot more quicker. So that is it for the video today, guys. If you like this type of video, like, comment, share, subscribe, and I'll see you lot in the next video.